Is this the end of the stock market bull run that we have seen since October 2023? Let's find out more in this video. Welcome to Tony's Investing Diary. In this channel, I hope to share about my personal investment journey to financial freedom, and I hope that you will be able to benefit from the sharing and in this journey together to become both financially and spiritually wealthy. Today is 1st January of the new year in 2024, and this is also my first stock market review video. Fortunately, today is also a public holiday, so the stock market is closed. Otherwise, for the future videos, I will be posting on every weekly Sunday. Before we start to review on the 2024, what's upcoming ahead, let's take a look at the last trading day of 2023. First off, stock markets closed down in the last trading day of 2023 with the Standard & Poor's 500 index falling a slight 0.28%. But what's more important is the Russell 2000 index, which represents the median enterprise in the US, and it has fell off 1.63%. Is there something that's coming in the year ahead? Let's take a deeper look at the charts. Starting off with the SPY ETF, we can see that it has ended in a bearish following star candlestick, although it's at half the volume on the weekly chart. Looking at the indicators like the RSI, which marks the overbought and oversold territory, it is approaching the overbought territory at 68 now. Although there is a slight bearish divergence here where the RSI is actually clocking a lower low versus the ETF itself, which is actually clocking a higher high. The MACD is still green, so for this bearish candle to be confirmed as a reversal signal, the coming first week of the January 2024 will have to close lower, perhaps to a level of maybe say 470 or even lower in order to mark this as a reversal. Otherwise, if it's still bullish or if it's sideways, then we will have to see what's the movement in the weeks ahead for this to be confirmed. Moving on to the daily charts, I think so far SPY has been on a really strong bull run since the bottom there at 27 October, and it's still climbing at a 45 degree, although this could be a pullback, and for some people they might be thinking about finally getting on the trend, although I personally would say that this is probably the tail end of this uptrend and the risk is probably higher than the potential gains that's there. If you were to look at the daily RSI, it is also showing a somewhat bearish kind of a divergence where the indicator is clocking a lower high versus the signal there, which is actually showing versus the SPY movement itself, which is still clocking a higher high. If we look at the MACD signal, which marks the momentum as well as the trend, we see that the peaks of the MACD histograms has been lower and lower. Right now we have entered into a below rate territory. Probably we will be looking at the next up wave to see whether it can still manage to show histograms of above zero. If not, then the chance of a major down wave ahead would be even higher. Now let's take a look at the DIA, which is the ETF that tracks the Dow Jone Industrial Average. So for DIA, chart wise, it's actually one of the stronger one, relatively to its own performance, because it has been clocking new all-time high for the second week, and the RSI has also reached a overbought territory. If we look back at history since 2020, we know that each time it has reached overbought territory, it usually comes with a major falls ahead. First time there in 2020 January, second time here, but it didn't really came out because, as we can see, it actually went on higher some more before finally it starts to fall. Although the bearish divergence here does give us an indication that this later part of the bull is probably not as strong as it seems. And right now at the right age, which is always the most fuzzy one, because we never really know what future might brings. Is this going to be a downturn ahead like here in January 2020, or is there some more bulls up there where it continues to clock higher in the months ahead? We will have to see. Alright, but in any case, right now it is still green on the MACD histogram, so reversal signal is not yet confirmed. On the daily chart, it's also up there for a 45-degree gradient, so a very strong bull run there. Although there are some potential signs of weakening, as we can see from indicators like RSI and also the MACD histogram, which has finally clocked into negative zero territory over here. Okay, next on, let's look at QQQ, which is the ETF that tracks the Nasdaq Index, that's dominated by all the technology stocks like Google and so on. So Nasdaq has actually clocked a new all-time high for the past week. This is the first one, as you can see on the chart there. But unfortunately it kind of closed down. Let's zoom in a little bit, and yeah, it kind of actually closed down, so it lost some, the gains that it had clocked in the past week. And the RSI is also showing a bearish divergence signal, while the histogram here on the MACD is still green, so it has not yet turned, but it's also lower despite the index of sorry, not the index, but the DIA ETF itself moving higher. Some of you might be wondering, why do I look at DIA ETF instead of the index itself? Because personally it's easier to buy the ETF, and you need a lot more capital if you want to try and trade the index. So anyway, let's look at the daily chart. It's also moving up strongly at a sort of like a hopping kind of a pattern, kangaroo hop, and this 20-day moving average is a possible support that we can look at. So on the last 20 days it has closed down. Will it be moving a bit lower? It might. We shall see what will happen. But just like the others ETF, I'm not looking at buying for now. If you already bought it, good job there, but do watch a bit more closely, as there are potential signs of turning down. You could actually sell a stop loss price that's possibly say 3 or 4% below the current price, depending on your own stop loss and risk management. Okay, moving to IWN, which is the ETF that tracks the Russell 2000, that represent the median enterprise in US. So this is the one that is showing the bearish, the most bearish one out of all four indices. Okay, if we look at IWN, performance-wise, historically, is actually the weakest, which we will see in a short while when we go on to another chart. As you can see, this is the only ETF that that's nowhere near the all-time high. It's only, if you look at here, probably it's at the top 2/3 of the overall range, but it's still way far away from 245. That is the peak there. And if we're moving closely while still staying on weekly chart, we can see that it has kind of like broke out of this range pattern here. I can easily draw a rectangle box here that marks the resistance and the potential support here, a lower support over here, and perhaps a more likely support that's higher around this level. So in any case, since the past week or the last week of 2023, it has actually closed as a bearish candle, where this is famously known as the falling star candlestick. I think it best to watch closer and to prepare for any potential down wave that might comes down all the way to 170 perhaps. But of course, if the start of the year, if it starts rising, then this bearish candle is not confirmed. Let's move to the daily chart. So daily chart wise is a pullback, but it's not extraordinary. I mean, it has done before and subsequently it moved higher. On the indicators wise, it's also a bit bearish diverging, but we also need to understand that towards the end of the year, the volume is actually lower, as we can see on the weekly as well as the daily chart. So personally, I will just actually watch. I will not be buying, but I may not start selling yet either. I mean, if you already have right on the uptrend of October, and you are keen to take off some gains, some money off the table, well, you can always sell half of it if you like, so that you still have the other half that's in the market that's continue to run. Well, if you look back at 2023 in the year, if you started buying all three of the ETFs there right at the start on, say, 2nd or 3rd of January 2023, you probably have a bit of pullbacks in March and even November if you happens to hold IWM or DIA, but if you're able to hold on, buy and hold, at the end of it, you will still have a pretty good gains, as you can see there. Although out of all four, the strongest one was actually the QQQ, and followed by the SPY, then the IWN, and surprisingly, even though DIA has been exceeding its all-time high for the second week, is actually relatively speaking, among all four of the ETF, the one that's the least of the gain at only 13%. And another chart here from Fundstrat and Bloomberg. Statistically speaking, 2024, which is the election year in US, tends to be the one of the most bullish one, as you can see from the seasonal charts here. We may have a bit of pullbacks in around the March period, but thereafter it tends to be an uptrend since then, with a relatively possible performance of even 10% up for the year, or at least statistically for all the past election years since 1950. Another thing also, if we were to consider 2023, where there's actually more than 10% gain in the previous year, marked by the blue line, the movement tends to be stronger, both the down wave as well as the eventual uptrend from there on. So who knows, if the trend does repeat, even if it's just based on average performance, it could be a 7% up or a 10% up. So, well, 2024 is an exciting year with the election. We probably have a showdown again between Joe Biden as well as Donald Trump. Well, to some people it might feel like it's between a rock and a hard place, but anyway, let's see how the 2024 turns about. For investors like us, then we will just have to focus on what's the best opportunities out there in the market. If you like this video, do give me a thumbs up, and also share your comments of any other index or stocks that you'd like me to share in my future reviews. I wish you a fantastic year here in 2024, and may the trend be always in your favor. Goodbye.